The economy is in bad shape. The media continuously reports how there's a recovery. They used the recovery theme in 2009 and consistently repeated it all the way through 2019. It's nothing but a joke. We are witnessing a complete disintegration of the global economy and for a specific purpose. The monetary system ultimately needs to be replaced, and that's exactly where we've been headed. Cashless society, supranational control, and the madness of it all. You came here for the truth, so let me unveil that for you. Today I want to talk about what's happening with the jobs report. You always get these numbers that come out. They are fictional and the media is never going to tell you why, but I want to break it down because most people won't look into the fine print, and that's what I am here to do. I'm here to save you time. I always give you the sources. It's documented in the link in the description. If you want to know more about these things, you can always spend the time to dig even further, but I'm going to give you a download on that today. We are also going to talk about what's happening with the stores. We're going to look at the bankruptcies. Stay until the end definitely because I've got information about these bankruptcies and how they have escalated. Bloomberg released some new data, so I want to show that to you. So let's begin. I always love to have a little bit of humor in these videos when I can, and you've got to see this. US unemployment drops to 7.9%. 7.9%. There are lineups of food banks all over the United States, and they get worse. And the situation where people literally need the government money to survive. We're talking about such a high number of people today subsisting exclusively from the government, some partially from the government, and they tell you that the unemployment rate is 7.9%. They still have not factored in how they miscalculated the actual unemployment rate several months ago now. They admitted it. The Labor Department admitted this miscalculation and said they will not make any changes to it. That is direct and complete manipulation. That still persists today, though the impact is reduced over when it first happened. Regardless, this number here is not true. Let's dig into some of the things, but I have done previous videos about why their actual calculation of the quote-unquote unemployment rate is inaccurate. Okay, they're showing us the U3 unemployment rate. If you want more details about that, I'm not going to harp on in this video. Just search the money GPS, all one word, and then put unemployment rate. Okay, that will give you the multiple videos, 2 videos, I believe, just this year, breaking down why this is the case. Unemployment fell from 8.4% in August, but that mainly reflected a decline in the number of people seeking work rather than a surge in hiring. But you won't hear that. All you will know, especially as time goes on, is that the unemployment rate went down. The government doesn't count people as unemployed if they aren't actively looking for work. And they do this why? Because it makes the things look prettier. They want to make it look this way so that statistically they can say we don't have to give out more money to the people, we don't have to help anybody out because hey, look, the unemployment rate is going down, things are getting better, there's a recovery. It's all manipulation, but the average person doesn't know what's happening. They simply take the information they're given and they swallow it. There seems to be a worrisome loss of momentum. There's a lot of caution on the part of employers. Of course, they're seeing these massive institutions that have thousands and thousands of people being laid off at this point and many more potentially in the future. And a lot of businesses, even if they're doing okay, they're just sitting back and waiting. Let's see what happens. Let's see what the big boys are doing, and maybe then we'll follow suit. They don't necessarily lead the trend, but they're certainly part of it all. Here's where the jobs are in one chart. I want to make something very clear. At the top of the list, you can see leisure and hospitality. Under that is retail. Big numbers here, but something at the bottom which I found interesting. Government, minus 216,000. Now, in the previous jobs report, I showed you specifically that the census workers were responsible for that massive surge. And if you look at this number, immediately I was thinking, okay, census workers are gone. That was the expectation. Temporary workers no longer needed. That isn't the case. In fact, if you go further into this, they describe how the majority of them are not part of this number. This is part of the education system, whether they are teachers or not, somehow related to education here and now, making up this number today. Massively concerning jobs report sends a signal that the economic recovery could be fading. This is pretty obvious if you were paying attention to all of the data previously, but now the mainstream media at least is talking about it somewhat. They are never going to actually connect the dots so that you can understand it fully. They're never going to paint that picture for you. But if you go and comb through all of the nonsense, garbage, political, whatever the heck is going on type of information and you scan through, you're going to actually get some things that are really just a snippet of important information. Takes a lot of work, a lot of time, but once you start piecing it together, it certainly is worthwhile. Take a look at the permanent job losers. This continues to increase. You will notice that it is mirroring what we saw during the financial crisis. Same pattern is happening today. They're escalating after falling significantly for years and years. Those who are suffering right now because they haven't had a job for a period of time obviously are going to put a heavier burden on the government, on their families, and everything in line, because the economy is going to suffer if you have millions and millions of people who are out of work. Look, they told you it was going to be temporary. They told you that it was just a furry furlough, but these kittens aren't the ones you've been used to, not the domesticated type of cats. These ones got claws. Take a look at this article here. Manhattan apartment sales tumble 46%, leaving 10,000 unsold units. Right here, they say it is a record amount of unsold units, and yet the prices are still significantly high. I'm sure that there isn't so much of the demand as the inventory rises. That's going to put downward pressure on the price, but still, it is entirely unaffordable. On the other end of the spectrum, they have this information out of the Wall Street Journal is talking about Aspen, and there is a massive boom here and some other places that they mention, but take a look. 800 square foot Victorian cottages on lots that once housed miners now sell for several $1,000,000. I thought I only saw this type of ridiculous mentality in Toronto, but apparently it's a lot of different places around. You know, you can see that there are excesses all over the place, but real estate tends to get so ridiculous sometimes, and there is no justification for it. Buyers sometimes spend millions to build modern attachments, often adding large basements. The ability to build below ground level is especially attractive to these people, many of whom are looking for extra space to work from home. That's right, I got a few $1,000,000 sitting around in my wallet and I need to build a basement for my house. Excellent idea. Federal debt tops $27 trillion for the first time. Nobody gives a damn. Let's move on. Benchmark's Bill Gurley compares today's markets to the 1999 dot-com boom. And don't take that title and just skim over it. Look at what he actually said. Further along, you get a good quote in here. And basically what he's trying to suggest is that they've got technologies today that have yet to come on the market. They're talking about them. They're excited about them, but they're 5 years down the road. They're 10 years down the road and further. And that isn't a good reason for a stock to basically accelerate to the moon, knowing that they are already priced so high. If they were extremely undervalued and you knew that something was coming 10 years down the road, okay, then you could start to add to positions. But you have no idea what's going to happen 10 years from now. Is that company even going to be in business? It's so ridiculous to pretend that you know what's going to happen 10 years down the road. It is very dangerous to have that mentality. I wanted to look at this here. You have read it before, I'm sure. This is something that I have shown you many times over the years. I have personally read it many times, and I'm talking about Bernanke, Ben Bernanke, Helicopter Ben, his speech from the Fed in 2002. Probably the most important piece, I believe, that the Federal Reserve has ever put out. He's talking about deflation, making sure it doesn't happen. That's what this entire speech is about. I think it's excellent. I think it is so telling. I want to spend a minute to talk about it. All right, here we go. Like gold, US dollars have value only to the extent that they are strictly limited in supply. But the US government has a technology called a printing press, or today its electronic equivalent, that allows it to produce as many US dollars as it wishes at essentially no cost. By increasing the number of US dollars in circulation, or check this out, or even credibly threatening to do so, the US government can also reduce the value of a dollar in terms of goods and services. This is huge. I mean, I know everybody kind of knows that, but it's so important to see it written right here on the page coming out of the Federal Reserve's mouth. I want to break this down just really quickly. Notice what he said. They don't have to actually print the money. They just need to say that they're going to do it. Just like with some of the programs that they have introduced, they haven't done much, but they say they will do it. Oh, we will print this many, let's say it was $500 billion for one program. We will do $500 billion. Did they pump that into the system? No. Some of them were fractional amounts of the total that they said they would do. But that helped the market because they said, oh, if the Federal Reserve is going to be there, I feel safer, I'll go in and buy. And a lot of these companies did that. The Federal Reserve was late to the party, and as you can see, they didn't really have to do much in order to get that pumping back up. He also mentions the fact that they can reduce the value of a dollar, not in relation to the euro, not the US dollar index. I'm talking about goods and services. Exactly. Thank you, Helicopter Ben. We conclude that under a paper money system, or as he mentions here, a digital dollar system, a determined government can always generate higher spending and hence positive inflation. Essentially, print more money, create more stimulus programs, it sloshes around, and that will create inflation. Of course, the US government is not going to print the money and distribute it willy-nilly, and then look at this. Although, as we will see later, there are practical policies that approximate this behavior. Normally, money is injected into the economy through asset purchase by the Federal Reserve to stimulate aggregate spending. When short-term interest rates have reached zero, the Fed must expand the scale of asset purchases or possibly expand the menu of assets that it buys. I want to highlight the fact that this was back in 2002, and they were telling us some things that would happen in the future. When interest rates reach 0%, they have reached the lower bound. That's what he talks about in here. They talk about the lower bound. At that point, they have to introduce QE. This was 2002, and all of this was not at all anywhere near what we saw during the financial crisis or more recently. And he's talking about the entire program, everything that they can do. One of that, which he mentions here, is to devalue the currency by 40%, because they've done this before, and he said that it worked last time, so we should absolutely make this part of the playbook. Okay, this is ridiculous, the way that they are able to manipulate the currency, do whatever the heck they want, because they say it's done in your favor when it is absolutely not. Small firms are going bust while others stay afloat on easy cash. I'm getting a vibe from Apple, and you know what's going on because they have been borrowing so much money, but they have so much cash. It's crazy. Limited access to capital squeezes firms that have already been in a crisis. September's bankruptcy haul marks a return to high summer pace. We continue to see a strong flow of Chapter 11 filings in September, consistent with what we saw in June and July. They range from businesses with small footprints to high street retailers. Here's the chart that's associated with that information, and you can see that the problem has not let up. It is continuing. Losing streak, third quarter was the worst on record for bankruptcy filings, and potentially, we'll see what happens by the end of the year, on pace to be equal to or perhaps worse than what we saw during the financial crisis. They refuse to admit what's happening here, and unfortunately, the average person is only looking at their 401k, their Robinhood account, and their retirement accounts because they simply don't have the foresight or the desire. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. While the views have been going down, the subscribers have basically flattened out. I have seen so much support from all of you, especially those who stay until this point in the video. That's for sure. I really, really do appreciate it. Thank you. If you want to learn how to sell stuff online, if you want to understand e-commerce every single step of the way, you don't have to spend $1,000 or $2,000. You can learn for free in the course that I created. It's called the Amazon GPS, and you can get it for free, theamazongps.com. If you want to understand the economy, the financial system, how all of this was set up, central banks, and full descriptions, I believe I did have that exact quote from Ben Bernanke in my first book, and so much more. Definitely check them out at the link in the description. If you want the audiobook, you can get that at themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? A lot of data, a lot of information. Definitely check it out. Click it. I'll see you there.